M really, we get into is M is for money. I think the most important thing we want to remember in terms of planning is that pre-tax money is always cheaper than after-tax money. Now, what do I mean by that? If you run a business and you spend money within your business and it's a tax write-off, what you spend, it's pre-tax money, right? If you take that money through the business through an S Corp, or you take it out of the business through a C Corp, or you take it out in wages, now it's after-tax money. So the key is when you're doing your tax planning is to spend as much as possible as you possibly can on a pre-tax basis instead of an after-tax basis. A lot of times we use the loopholes that we have where we reimburse you for your home office costs, perfectly legitimate. We use the Augusta rule to reimburse you for your meetings that you have in your home. You can do that 14 times a year, and all the other things, paying the kids, all the other things that we can possibly do, writing off your vehicles through the business, everything that we can possibly do, we want to do through the business because it is always cheap. And depending on what your tax rate is, if you're making pretty decent money, and especially in California or some of the other high tax states, you could easily be looking at, 40, 45, 46%, and sometimes as high as 48% of your profits being pulled out by the government. And let's say you want to go on vacation, right? How to structure that vacation so that it's a business expense instead of a personal expense. Your money and how you spend it and how you separate it is really important, and justifying and having that proper documentation how you spend your money is very important.